Great. So thank you very much, Marcel, for the very nice introduction. Pleasure to being here today and moderate this panel on stablecoins. So we heard a lot today already about regulation. We'll also talk about this in the context of stablecoins around more, kind of decentralized use cases. Also touched about security settlements. And now we will focus in the next 35 minutes of the topic of stablecoins, which is, I think, a very, very important topic where we see a lot of movement, where we see very strong dynamics in the market, where we see also, new projects coming up, or to me at least popping up kind of every week or maybe month, maybe week it's too much. It's definitely a topic that is of interest, and today with me have very, very distinguished panelists to discuss these topics. So to my left, Professor Dr. Joachim Wuermeling, who was former board member of Bundesbank, now professor at the ESMT in Berlin, and also attorney at AllUnity. Then we have Patrick Hansen from Circle, who is in his role here as a senior director of EU strategy and policy. Then we have Johannes Wirtz, who is a partner at Bird & Bird. And then we do have, of course, here Alexander Höptner, who's here in his role as designated CEO for AllUnity. It's a very interesting stablecoin project, and coming up soon. And then last but not least, we have Dr. Marc Henniges, who's a senior manager at DeFi. So very interesting backgrounds and very diverse backgrounds. And I'm really, really looking forward to this panel and to the next 30 minutes with all of you. So kind of setting the scene, as said, stablecoins are currently very, they are used in the crypto space, really interesting and strong dynamics. And maybe first question to you, Patrick, because you're also working for a Circle who's already here for a few years regarding stablecoins, both US dollar and euro stablecoins. Maybe you could briefly kind of summarize where we stand today, like for what are stablecoins used as of today?
Yeah, happy to. And first of all, glad to be here once again. The Frankfurt School Blockchain Center Crypto Asset Conference has really become one of my big blockers once a year in the calendar. To get to your question, what are stablecoins being used for? I would, to start, I would say let's acknowledge that stablecoins are used in the first place, right? We have hundreds of billions of stablecoins in circulation. I think in the last years, per year, roughly 11, 12 trillion of stablecoin transactions have been settled on blockchain. That's comparable to roughly Visa settlement numbers, yearly numbers. If you look at wallets, we have roughly around 25, 30 million wallets that hold stablecoins out there. And the large majority of those wallets, I would say 80, 85% of those, hold between 1 and 100 US dollars. So those are mostly retail wallets, so to say. And a large part of those, actually, if you look at the numbers, like roughly 20% are active on a weekly basis. So roughly 5 million or so wallets that transact stablecoins on a weekly basis. So that's just to say stablecoins are here, they're being used, and there's clear traction in the market out there. And if you look at where that traction comes from, where that demand comes from, I would say as of today, there are at least 3 broad areas where stablecoins show clear product market fit. One is the crypto capital markets. I think that has been discussed at length, crypto trading, settlement. Another one is just as a store of value that people want to hold, stablecoins, primarily the US dollar around the world, mostly in, developing in high inflationary countries. And the third one that as of today already shows, promising signals of product market fit is cross-border payments, both for remittances, but also potentially B2B payments, especially in the crypto world. More and more startups are already paying their employees with stablecoins. And so that's, I would say, where the bulk of the activity is today. And then I'm sure we'll discuss, potential future demand.
Exactly, and that would actually be exactly my next question, maybe turning to you, Alexander, because you're also working on this kind of stablecoin initiative. Like, if we look into the future, what do you think, which further use cases, maybe besides the 3 where Patrick said there is already product markets that will come up, and where will stablecoins be used in the future?
I think these are, for the beginning, the dominant ones. Yeah, the crypto space directly, there is a need in the market and there's a potential in the market, so that one is checked. As you said, Patrick, payment services, so classical banking service, payment service, remittance services, collateral management is a natural. Everything is there, regulation is there, so we can actually process it. It's extremely also interesting for real world economy. So let's say cross-border payments for corporates, but also the FX markets. Everything is there. We can directly tap into that one. And then probably an aspect everybody's aiming at is the big tokenization wave that's going to happen. But this is my take, this is still a way to come. It's not next year, it's maybe 2, 3, 4 years until we see significant volume. So I'd say it is exactly like you said. I mean, one aspect can really be if you put it to, let's say, a very interesting perspective and you tokenize funds. Yeah, so a tokenized money market fund that you do on the basis of a stablecoin and use that as global collateral management instrument. You can have derivatives that are very interesting for that. But again, there are significant use cases today that you can directly tap into where the regulation is there, the market participant is there, the customer need is there, and this will be a starting point at least for the next 2 or 3 years.
So we heard a lot about cross-border use cases, FX use cases, the crypto market. But one topic, and maybe turning to you next, Joachim, is really also like the industry, which often feels kind of a little bit, I would say, left out in the space of be it digital euro, also stablecoins, others. What do you think? So is there also potential for use cases of a stablecoin type of constructs?
Well, absolutely. ESMT is a business school, not that much focuses not that much on finance like this school here, but on real economy. And so this is also our focus. And in the area of smart contracts, delivery versus payment in the industry, machine-to-machine payment, and all these buzzwords, Web 3.0, and so on, there are an unlimited use cases to be found. When you once start to discuss with a merchant, with a supplier, they come easily to the point that their whole life can be much facilitated by the use of smart contracts where the payment is automated, where the invoice is automated. And here I see a variety of reliable means of payments on the blockchain developing. Of course, there is CBDC, the digital euro, there are the stable coins, there are also tokenized deposits or tokenized money in other forms. And my view is that in the future, all these means of payments will create their own USPs. Is it for cross-border? Is it for big amounts, for small amounts? Is it a sophisticated use case, an easy use case? So we will see numerous reliable means of payments on the blockchain, and stable coins will be, of course, an important part of it.
So I would say a very enthusiastic panel about the future of stablecoins, which is very good and very interesting. Johannes, turning to you next, we do see, of course, in Europe now that there is a lot of legal certainty coming, right? So one kind of challenge around stablecoins was always that companies weren't really sure, what to deal with it, what you're allowed to do, what not. So now we have the markets in crypto assets or MiCA regulation there, right? Which is often kind of praised for being landmark, but on sometimes always said, well, it's kind of too strict. What would you say, from your kind of perspective, is the MiCA a success, and how would you evaluate it also for Europe in this space?
Yeah, who is happy about new regulation? So that's a question. But I think this time it's a bit different, because before MiCA we had regulation, but regulation on a member state level, and now MiCA is opening up the gates between the member states. At the same time, MiCA is also putting up walls to outside Europe, meaning stablecoins issued in other countries than European countries might face difficulties to be used or offered in Europe, which is, of course, for a crypto world which is global, it's an issue, and there needs to be seen how the market will deal with this. Whether players who just issued their USD stablecoins in the US find solutions how to issue them in Europe as well, or whether there will be a kind of dual issuance. All those questions need to be solved, and there are a lot of open questions in relation to MiCA. On the other hand, as you said, we get clarity about regulation, which is important also for larger players to just access the market and know where they can find their product and find their opportunity to issue their stablecoins. And also, just saying this, the term stablecoin is not itself defined in MiCA. It's a term of the market, and therefore also finding The different tokens which may be qualified by the market as stablecoin will be quite interesting. So on the one hand, we will see that e-money tokens qualify as stablecoins, but there might be more. There are asset reference tokens might be qualified as stablecoins as well as tokenized deposit. So there is still a lot of work and discussion coming up. But yeah, as you said, we have a first clarity, and now we have a ground to discuss, which is beneficial for Europe and for the market.
And will definitely be interesting to see how the exact guidelines will roll out, right? And what this will then in particular mean for specific countries and specific jurisdictions. Marc, turning to you next. I mean, we talked about what the potential of stablecoins are, which use cases you could kind of satisfy. What do you think in terms of, kind of challenges, like, maybe some things stablecoins can or should not be used for? Would you say, no, the sky is the limit, but, or would you say, no, there are some hurdles?
All right, thank you. Yeah, perhaps to give some context, first defined as a consultancy, right? So I come here perhaps representing a bit of the application side of things, right? So we see where clients would want stable coins, where they would want to use them. And I guess I would like to answer the question from the other side first. So where can they be, in general, very useful? And I think that is whenever smart contracts are involved, where you have some sort of business logic or asset representation on a blockchain, where you have smart contracts already, and you want something to be able to interact with these smart contracts. But also, when I talk about stable coins, I usually mean MiCA-based money tokens or e-money tokens, right? We don't talk about CBDC when we say stable coins. We also usually do not talk about fully decentralized stable coins. We mean rather MiCA-based money tokens. And for them, I feel that they are most useful in very specific use cases. It's like a PayPal transfer with your friends, right? Before you send them PayPal money, you first ask them, is it fine to send it with PayPal? Because ultimately, it's a claim against PayPal that you're giving to them, and they need to be able to accept that claim as a payment. So it's the same with a stable coin. When I want to use that, I basically have to be in a defined use case and defined setting where I know that my counterparty will be able to accept this stable coin as a payment. In terms of where should it not be used, I wouldn't say it should not be used somewhere. I mean, it always depends on whether my counterparty will accept it as a payment, right? And that's, I think, where the limit to this discussion may be, because we're obviously often we talk about money representation. Like, is it a CBDC? Is it a stablecoin? What kind of money representation is it? While what is most interesting to our clients is usually, can I make a payment with it? So they mostly want to focus on the aspect of, is it possible to make a payment in a way that the type of value that I want to use for the payment is subtracted from my account, and the type of value that my client wants on their account is added to their account. And so I guess what brings a lot of more value to the discussion than talking about what I can do with a stable coin is how can I integrate it into the ecosystem? How can I build bridges in between applications such that I don't have too many media breaks on the way when I send money from A to B?
Now, we've also seen that in the last few years, the stablecoin market was really strongly dominated by US dollar stablecoins, right? So that almost 100%, of course, not fully, but was US dollar stablecoins. And I mean, maybe a question to you, Patrick, is you guys also launched a euro stablecoin. Do you think that this kind of difference in market capitalization would prevail, or do you think that there is some kind of potential now also after MiCA that euro stablecoins somehow kind of offset some of the difference in terms of market share to the US dollar stablecoins?
I don't expect any overnight hockey stick developments for euro stablecoins, to be frank here, because at the end of the day, the use cases I just described that have clear product market fit, crypto markets, store value, cross-border payments, those are inherently global markets where, liquidity begets liquidity, network effects play a huge role. And those are generally markets that gather around, a few winning solutions, and those are currently, dollar solutions. And I think they will remain heavily dollarized. MiCA will introduce some changes, and I am optimistic for euro stablecoin growth. I just think it will be, steady, slow growth instead of any overnight changes. I think partly on the crypto market side of the equation, we will see some fragmentation due to MiCA on the exchange market side. So I do believe euro stablecoins will play a larger role there. The question is, how large is this role after all? And then obviously, if you think more towards the future, if you go beyond those use cases of today, if you think about capital markets that Alex mentioned, if you think about consumer payments, that will definitely also be a major topic for the next couple of years. That's where inherently euro stablecoins make sense in the European Union, right? Because they're closely related and tied into existing accounting systems, tax systems, operational processes of companies here. So I would say those more real-world industry payments-related use cases will dominate for euro stablecoins, but I just think it will take some time to get there.
Now it's not just stablecoins being out there, right? But some other kind of competitors in this regard, right? And one is definitely kind of the CBDC topic that is also here. And turning to you again, Joachim, is in this kind of payment future, how would the competition between a CBDC and a stablecoin look like? Is this kind of an either or is there a coexistence?
Well, I think there is a big difference in the market landscape between the US and Europe. And the big difference makes, of course, the digital euro. Of course, it's not clear whether it will be provided also on chain. But my feeling is that the discussion is developing in that way. That is the first difference, because the digital dollar is not at the horizon at this stage. And the second difference, and that's also very interesting, is that after the ECB announced that they will provide a digital euro, all of a sudden, the traditional market players, the banks and also others, they say, okay, that may be a disruption of our business model, and they started to develop their own digital currencies like euro-dominated stablecoins, but also tokenized deposits or commercial money. So the competitiveness in the European market in terms of the cash leg on chain is much more challenging than in the US. And here I see that there will be a competition, and my feeling is that probably the CBDC, which will be provided by the ECB, may not cover all the use cases in the same way like a stablecoin or tokenized deposits or tokenized commercial bank money. So there will be a competition, and all the people who provide money for blockchain will need to establish their USPs for specific applications, for specific industries, for specific uses, and there will be a variety of means of payment in the first years, and then there will be a consolidation, and hopefully all this will be interoperable in a way so that we will not create islands of payment systems. That would be a step back.
Did you wanted to add something, or?
Yeah, I think that exactly like Joachim said. I mean, you will see with the definition that's coming now and the regulation that's coming now, you will see a myriad of use cases in a sense, yeah. But firstly, as you said, I mean, I don't know how it should look like because it's not defined yet, yeah. What are the use cases there? I don't know. Is it on-chain? Is it off-chain? I don't know. Is the market big enough that even if it comes to fruition that, let's say, a privately issued stablecoin has enough use cases? Yes, absolutely. But I think the dominant piece ultimately will be if you're a user of whatever stablecoins come out there, deposit tokens, CDBCs, digital euro, what have you, yeah? You as a customer, you don't want to have a look at your wallet, see that you have €1,000, and you go there and you find out you're not able to pay something because these 1,000 are deposit tokens. You just have €1,000. You don't, fucking care whether this is a deposit token, a CDBC, a digital euro, whatsoever. You just want to pay. So ultimately, this fragmentation of use cases doesn't make sense and it will not prevail. Ultimately, you will have a digital euro and you will use it wherever you want to use it. All other use cases will over time just evaporate.
That's really interesting, Alex. And what I was also wondering, maybe turning to you again, Marc, was that in the end, of course, it should be thought from the customer side, right? And the solution should basically kind of win that gets the best traction on the market, which I think is a very fair approach. But maybe a little bit going back after talking about CBDC on this tokenized deposit topic, Marc, like, how do you think this relates, to stablecoins? Like, where are they better? Where are they worse? Or is there something where you say, like, Alex, hey, should just build out the stuff, the market decides? Like,
right. So I guess already today we have use cases where central bank money is used, security settlement, for instance, right? And we have use cases where it's not used, where stable coins or deposit tokens could find their, I don't want to say niche, but where they could be applied, right? And also we have, if you look internationally, we have different kinds of markets where delivery versus payment models differ, right? So in Germany, or in Europe, we usually have DVP model 1, where we settle right away mostly, but there's other models where we would have intraday settlement first and the final settlement at the end of the day. And so perhaps as a means of intraday settlement, where you pay with stable coins or deposit tokens first, and then with central bank money later, because it just fits in the model and it fits in how you want to do business and how you want to do DVP. There, I would think it makes a lot of sense. But also, I think there are just use cases out there where you do not need a CBDC, right? Where commercial bank money or where e-money or where Mica-based stablecoin or money token will fully suffice, or even maybe better because it can bring additional functionality, right? A CBDC may be very limited in terms of its availability. I do not believe that the central bank will run thousands of different blockchain nodes in their basements to bring a money token, a CBDC money token on all blockchains that are out there. There will be payment service providers as intermediaries who will need to make sure that money and tokens and payments are available on all these different ecosystems and in between ecosystems. And I guess that is where money tokens, stable coins, and also tokenized deposits can come in whenever it is too much to ask from the ECB to connect directly to that use case, but also when you want perhaps additional functionality that you could put into a smart contract that represents a money token, but not something that would be a CBDC that is just there for final settlement. Hope that makes sense.
We now talked a lot about kind of the use case differences, also kind of some of the economic differences on the technology. But Johannes, to you next, like, how is this like from the legal side? Because we have lots of companies also there, right? And there are differences between tokenized deposits, for example, and stablecoin as these, kind of private sector issues, novel forms of money, however you want to call it. So what are the kind of differences from if you address them from a legal perspective, these two?
Yeah. Taking a look at what MiCA actually does, MiCA regulates, as said, those types of tokens which have not been regulated before. Meaning, if you tokenize, for example, a security, then MiCA will not apply. It's still the old regulation, MiFID and prospectus regulation, which will apply to the security. The same is for tokenized deposits. So if it's just a tokenization of a deposit, then MiCA will not apply because it's still a deposit, only tokenized. So that brings us to the question, what's actually the difference between e-money or a money token and a deposit or a tokenized deposit? And this is taking a look at who can issue e-money. It's quite clear. It's a credit institution as well as an e-money institution. Who can issue an e-money token? The same, a credit institution or e-money institution. Who can take deposits? It's only credit institution. So to have a tokenized deposit, you must have a credit institution taking this deposit. The deposit taking is, for this aspect, mainly based on the fact that the bank takes deposits to grant loans. So there's a clear direction. If you take the money as e-money, then you are not allowed to use this fund to give loans. Next point is that if you get an e-money token, then you cannot earn interest on it. On a deposit, you are able to pay interest as a credit institution. The deposit shall also serve as a store of value, while the e-money or e-money token shall only be used as a payment method. And so there are certain differences between tokenized deposit and e-money or e-money tokens. And those, of course, then also shape the use cases and also the regulation of it, which brings us to the question, why should I use one or the other? Yeah, well, that actually depends on the case and on the question, how am I regulated? Am I allowed to take deposits or not? So what I hear from many clients, which are banks, they have interest in tokenized deposits because they are more free with using the funds they receive for it, while there are a lot of players who opted for less regulated option, the e-money institution licenses, and those, of course, go with e-money tokens.
I think it's really interesting how now the legal differences come together with kind of, you know, the economic implications, the business model implications, because if you're not allowed to get interest from that, right, it's a different business model. So if you're under the umbrella of deposit insurance, which also comes from this, right? So I think that's interesting how this translates also to the real life use case. I'm really curious to see how this turns out then in practice also as soon as we know the concrete MiCA guidelines. Maybe to round this panel up, we have 5 minutes left. One last question really to everybody of you. So just imagine you're now in 2030, so 6 years from now, and let's assume, you know, you're a payment use case, so you're basically paying. What do you think? Which kind of infrastructure you would basically prefer to use? So what I mean is, you know, if you're a shop and there is maybe cash, there is CBDC, maybe there is a payment where there's, you know, a stablecoin in the background, or maybe not, you know, what would be your preference? And of course, it's hard to tell because we don't know all of this yet, but I like to get some very interesting thoughts, and maybe pretty, like 1 minute each, because otherwise we are running out of time. And Johannes, do you want to start? You're laughing.
Yes. So we are in Germany, and I guess most of the Germans will pay also in 6 years with cash. For me, I'm usually paying either with my phone or with card, and I think that will not change so much. The question will be what's behind the card or the phone, and there, as a user, I actually don't care. I just want to pay. I've never enjoyed paying, therefore, I just want to have the payment settled.
Very nice. Yeah.
Well, should I continue? Well, maybe a kind of a radical vision. My idea is that all the payments are initiated automatically on blockchains on the basis of smart contracts. People do not really know what kind of digital euro is behind. So to sum it up, we don't pay at all.
Don't pay at all. Nice. Patrick?
I mean, I don't really care. I think at the end of the day, people will choose what's cheapest and what's simplest, because that's always what drives user behavior. And so we'll have to see, you know, how those different optionalities compare in the market landscape. I think on maybe just one interesting note, I think that at the end of the day, optionality will be the word of the day. People will, you know, be able to pay with whatever they want to pay, and then there will be a middle layer between the merchant and the payer, and the merchant can just settle with whatever kind of money the merchant wants to settle. So at the end of the day, I think it will not, you know, matter for the payer. I think it will not matter for the merchant, because the merchant will be able to settle in whatever form of currency he or she wants to. And it really comes down to just ease of use and cost.
And I would like to build on that, because I really like that idea, and it kind of goes back to what I said earlier. What is important to me is that I can spend the kind of money that I want to spend, and that my counterparty receives the kind of money that they want to receive. So when I walk around in Frankfurt, even in Frankfurt today, there are places where I cannot use my cards, right? I have to use cash, because they only accept cash. For some reason, it is cheaper for them to accept cash, and where you are in a very competitive price range, you kind of go for cash. But I do not always have cash on me in the amounts that I needed in that very moment. So what is important to me is that I can select the source of the money where I want to take it from, and the other side receives the money in the form that they need it. And I guess that for that, I will, in 2030, I will not be using physical coins or money anymore, because it's not possible to do that with what I want, what I have in mind. So I guess we will have some form of wallets, lots of bridges between technology, and there will be centralized and decentralized elements in it. And that is, I think, because we always need both. Whatever use case we look at, there's always decentralized and centralized infrastructure involved. And I think it's going to stay that way, and it's still going to be like that in 2030.
Alex, I'm sure you have a great vision now for 2030.
It's an unfair question for Bitcoin Maxi. So for me,
Lightning?
No, it was said already. So ultimately, I don't care. And honestly, I don't want to choose. Yeah, I have one account or wallet. I don't even care for the name. Yeah, and I have my currency on that one. And whether the currency goes that route or that route, I don't care. I want the currency to find the most efficient and the cheapest route for me. And that's it. And all will be digital. And whether then this is on-chain or off-chain or whatever, securitized or tokenized, I don't care. I just want to have the best use. That's it.
And I think that's really, really interesting to kind of, agree on exactly that, because when we were all sitting there, I don't know, here 5 years ago, we were so kind of nerdy about tech and all of that, right? And we are still enthusiastic, but we are way more and more thinking this from a user perspective, right? So as you guys said, like the cheapest, the most reliable, the easiest one, maybe one where maybe we don't even need to interact. We will see. So thank you very, very much for this very insightful full panel. Thanks for being here. And yeah, I'm now handing back over to host Marcel. Thank you very much.
Great. Thank you, guys.